Hey guys, welcome back. Thanks for checking out another one of our training videos. Obviously, as you can see, I am still me. This is not Aaron today.
Hello.
So you are getting blessed with the presence of Mitchell Scott.
Appreciate that.
Tell us who you are, what you do.
Yeah, my name is Mitchell Scott. Like Adam just said, I am a lender over at Commerce Bank. So help your buyers get into their homes.
So as you guys know, having a go-to lender is extremely important. Having one or two is really good to give your clients some options. We probably have 3 or 4 lenders that we like to use, and Mitchell's one of the lenders that we like to refer to. So if you're a new agent, you've probably gotten his name and number, and we definitely want you guys to have a face with the name. So today we're going to cover basically Lending 101, just some basic questions if you're a new agent, things that you can talk to your client about, some bullet points you can go through. We will run through some of the different loans, debt to income. Mitchell will kind of just give you a real quick, I guess, Reader's Digest version of why it's important to have your ducks in a row before you go talk to the lender. The first step in the whole buying process, we always say, is go talk to a lender. Okay, so first thing, let's just run through a couple of the loans that you guys have access to that most buyers use.
Yeah, so your typical loans are going to be like your conventional financing. You also have FHA, USDA, and VA loans. Some of those last 3 are more the government style loans, and so there's different quirks about each one. I'll kind of cover a few of them real quick. So on FHA, a lot of people have the misconception that FHA loans have to be a first-time home buyer, and that's not true. We have people all the time that are coming in that just want to be able to come in with as little as possible.
How much do you put down on FHA?
So on FHA, we can do 3.5% down. So it lets them come in with a little bit less skin in the game. A lot of times your rate's going to be a little bit lower on the FHA, but you're also going to get hit with the mortgage insurance anytime you're less than 20% down. One of the negative sides of the FHA is you're going to have that mortgage insurance the life of the loan versus on a conventional product where it would fall off at the 80% mark.
Okay, explain mortgage insurance.
So mortgage insurance is basically a government mandated process that we have now that ever since all the fun stuff that happened back in 2008, that if a buyer is coming in with less than 20% down on the home, we have to put on what's called mortgage insurance. So you'll hear it called PMI, MI, mortgage insurance. It's all really the same thing. So each of the loan types also can call it something different. Some will call it a guarantee fee or whatnot. But basically, it's just an insurance for the bank that if something were to happen where the buyer were to foreclose on the house or not be able to make the payments, that we have the cost of the loan covered from Fannie and Freddie. So
and it's probably what, $100 per 100,000, you think?
Yeah, it kind of again depends on the loan. One benefit of Commerce is ours kind of changes based on how much down you have. So a lot of people are doing a different ratio based on if you're doing 5%, 10%, 15% down and things like that. So I've seen it as low as $30-$40 on a loan all the way up to $100-$200 just based on what they have to come in with.
So the big thing with that, with FHA, it's 3.5% down, and you can use it anywhere.
Yeah, so okay. FHA, there's not limitations usually on location. It just comes down to if you qualify credit wise and income wise.
So if you have a new client and they have $5,000 that they can put down, well then you can do the quick math and know that they can buy a home with an FHA loan up to, I don't know what it is, $120,000 or something like that. So FHA is a great loan as far as lower amount down. Okay, USDA.
So USDA is another government program that's kind of enticing people to move somewhere outside of the city proper, basically. So the rules and the guidelines change consistently. So this is one of those things that is convenient that you guys can actually, as realtors, look up. You can Google just USDA loan, does it qualify? Or different things like that, and you can pull up the USDA website, type in the address of the house, and it'll tell you whether it qualifies or not. Right now in Springfield, what we found is basically if you're a couple miles outside of the highway triangle or highway circle that goes around Springfield, you're probably okay, but it's worth taking a look anyway. So as of right now, Nixa, Republic, Ozark, those places still qualify, but they've been up in the air for changing because of the growth of those cities as well. So something you're going to want to take a look at. But USDA allows you to put 0% down on the house and get in there. There are income limits on it, and those change regularly as well. well, so we can get into that on a one-on-one basis if that's something we need to talk about. But it allows your buyers who, they might be great credit-worthy buyers and they just don't have funds right now to put down. They might just be starting a new job. They might just be doing something where they just don't have the income to bring to closing, and we can get them in for 0% down.
So USDA, some more hurdles to jump through
Yeah.
just as far as income and location, but fantastic loan program
Yeah.
for someone who wants to finance 100% of the purchase price.
Yeah, absolutely. It's going to be a lower rate than your conventional as well, but again, you're going to have that mortgage insurance that's tacked on there. But it's a great product that the government is working pretty hard on getting people to spread out a little bit outside of the city propers.
Okay, VA.
VA loans are your veteran loans. So if you've had any type of military background at all, this is another 0% financing option. Just something that we can be a blessing for our veterans. There's a lot of great potential there for veterans to use that product to just, whether they're moving or something, and taking care of those benefits, whether it's first time or they're wanting to shift and buy a new home. So similar to kind of the USDA, except there's not a location limit on it, and there's not an income limit on it as well. You can buy bigger home, or veteran comes home, starts a business, is successful and wants to buy a larger home. We can work with that as well, versus where USDA has a little bit more income requirements.
These are good questions to ask your client when you sit down, because if they are a veteran, then they'll have access to this.
Mm-hmm.
There are some things that they have to provide as far as documentation. You don't have to be an expert in all that or
Right.
know all the details, but you have to know someone who does, which is why we wanted you guys to meet Mitchell. But okay, so VAs, again, great
Mm-hmm.
program, 100%. What most people don't know with VA is you can put money down.
Yeah, you can if you want to.
Yeah. So you have some VAs that they still put money down, they just get a lower rate.
Yeah, absolutely. They're taking advantage of the lower rate. They're also getting rid of the mortgage insurance because they're putting some money down, or affecting it that way. So yeah, it's a big blessing. It's a really good product.
Okay. So let's cover conventional loan,
Mhm.
and then if you have any extra loans, throw them in there as well, or just loan programs you guys do, and then let's jump into closing costs.
Yeah. So conventional loans, it's basically just your typical secondary market loan. And one of the benefits that I'll say that Commerce does is we service all of our loans. So whether you're doing any of these that we've talked about, we're doing the servicing on them.
So explain what that means, because that is huge right there, guys.
So a lot of places out there will sell a loan to a different provider, and then you'll hear horror stories or whatever from certain borrowers where in the last 5 years I've had 5 different lenders because the bank gets bought out, closed, whatever it is, and the loans have to shift to whoever has the new one. And if that person then doesn't want to keep it, they'll sell the loan again. So Commerce holds on to all our products, so you're going to be working with Commerce. Your buyers are going to be working with Commerce for the life of their loan. I do like to mention that on our 30-year fixed product, like our conventional, we do sell those to Fannie, so it's in their portfolio, but we still do all the servicing for them. So they're talking to me, they're talking to our staff. They're not having to reach out to somebody else to figure out what's going on in their loan down the road as well.
So any question you have, if you want to change your payment or whatever it is, you can contact Mitchell directly, no matter what. And most of the time, after you close on the deal, it's sold off, and then you're getting on a website or calling an 800 number, and you got to re-explain everything every single time. So to me, that is really valuable there.
Yeah, we take customer service. Yeah, we definitely take customer service very, very important. It's a very high standard for Commerce, so we're going to be taking care of our customers all the way through.
Okay, so closing costs. This is one of the biggest questions we always get whenever we're writing a contract is how much are their closing costs going to be? What are the closing costs? Can you explain those? So obviously every loan, I assume, will have somewhat of a different structure as far as closing cost and whether it's funding fees or whatever it is. Just real quickly, just kind of give us, I guess, the all-encompassing what closing costs are, and let's just say the last loan you did, and let's just say it's $200,000. Roughly what the closing costs were on that.
Yeah, so just right off the bat, one of the easiest things for us with Commerce and is that on our conventional product and all of our products on our government loans, we have just a flat origination fee of like $800. So everyone's got different amounts there. We're kind of on the low end, but we've seen a lot of people shifting to percentile based origination fees, and that can start hitting people pretty hard as you do higher end homes. If you're doing, that means, so 1% origination fee on a $150,000 home or $200,000 It's $1,500 to $2,000 up front just for the origination of the loan. So the other really cool thing is any of the government programs they have, we have, so like USDA, VA, and FHA, there is zero origination fee. So we are not charging borrowers to use those products at all. So really the closing costs outside of the origination fee are going to be pretty standardized. So your government fees that you have from taxes and all that fun stuff, that's pretty standardized. Appraisal cost is standardized, credit reporting standardized. So that's kind of all, those numbers all kind of pool in together into your closing costs along with your title. And really that's one thing that can kind of change on the closing costs is who you choose to use as a title agent. There are some really good ones, and I know Alpha uses some really good title agencies, and I love working with them as well. So that's something you're going to want to talk to them about, or if you have questions, we can kind of talk about it together on who you use on the title side. But really, all those kind of pool together into your closing cost. And then depending on how you write the contract and what you're doing there, that's not for me to say at all, but you can roll in things like your escrow account into closing and do with the different things like that as well. So when people talk about total closing costs, most of the time they're assuming all fees plus the escrow, which is taxes and insurance up front that you have to get set up on the loan. If you choose, you can pay your escrow, your taxes and insurance outside of closing if you want to. That does not have to be part of your loan. So you're looking at anywhere between, like, with total package from $2,500 to $4,000, depending on how big the house is with taxes and insurance when you factor all those numbers in. So I'd usually say that $2,500 mark for just fees and title and taxes and all those different things is a pretty good ballpark. And of course, that's going to drop down for the government loans because there's no origination fee for us.
Yeah, I would say average sales price in Springfield, it's about $170,000. Most of those loans, like Mitchell said, will probably be between $3,500 and $4,000, what we see, and then going up from there.
Depending on taxes and stuff.
Yeah, closing costs. Again, just real quick, those have to be paid either with cash at closing. So you bring additional cashier's check, amount for your cashier's check, or you can work it into the loan. So sometimes when you write the offer, you'll offer $100,000 and ask the seller to pay $3,000 towards your closing costs.
Right.
That's what we're talking about there, as far as the fees to the lender, the title company, insurance, taxes, all that stuff.
And what's cool about a lot of that is none of it is locked in, set in stone until we get closer to closing. So if it just turns out where, hey, we got down the road and we don't have the funds that we wanted to cover that closing, let's kind of work on that. There's ways that we can work on the numbers. They're a little flexible as we get towards closing to make sure everything works out for the buyer and the seller.
Okay, so let's do a little scenario here. I just started a new job, and I get a paycheck every 2 weeks. I make $50,000 a year. I just started last week. What's the soonest I could go out and buy a house?
So it kind of depends on a couple different things. If you have a contract, it's a lot easier to work with because we have guaranteed income. There are situations where we don't need to look back as far, but usually what we're looking for is a 2-year work history. Sometimes we can work with that if it's school, but if it's just a job gap where you weren't doing anything for a couple of years, that's harder to swing. But really, if you're starting a job, you have a contract, you're getting your consistent pay stubs, that's a lot easier for us to work with in that area.
Okay, so other scenario is I just started a new business where I'm selling toothpicks. Okay. This is my first year. I don't know how much I'm gonna make. Like, how long do I have to do that before I can buy a house?
Right, so businesses are a little bit more complicated just because we have to do a 2-year average is usually what we look at, your past 2 years on average for your income. Every lender is going to be a little bit different on these requirements. It just kind of depends on their structure, their situation, their overlays. But we're going to look at the past 2 years of your income, which is where we run into, we can run into some kinks based on, hey, this is what I brought home, but this is where I reported on taxes. And that's something that we have to use the reported income. So let's say you brought home $100K, but on taxes after write-offs and everything else you're doing, you only show that you made $30,000. I have to work off that number instead. So then we use a 2-year work history or 2-year business history, and we can use those numbers. And then we like to use year-to-date as well. So if obviously if it's July, August, September, or whatever, we can use that year's income if things have been moving up as part of the draw to raise your average for the income.
So work with a lot of first-time home buyers. They've never bought a house. They've just been renting. They don't have a ton of work history. They don't have a lot of credit. Let's just say that they don't have a lot of debt. Like, how does that work with a first-time home buyer? They've only rented. They don't have a lot of history. Like, are there options, or do we just kind of advise them to hang tight for a year, or what? what do you think there?
For sure. So there's definitely a couple options with that. So if they have absolutely no credit at all, they bought everything cash, that's actually better than having bad credit. So we can actually use what we call non-traditional credit, which is basically 3 sources of monthly payments to prove that you've paid your bill. So we can use cell phone bills because those won't show up on your credit. We could use gym memberships. We can use internet phone, or we can use internet, TV, cable, whatever. We can just, as long as you have a contract with someone that you're making monthly payments on, we can look back a year saying you've not been late and you've been making payments consistently. We can count that as credit worthiness, so that we can move forward with the loan. Now, if you just have low credit or the credit is outside of our guidelines, we can formulate a plan to say, here's how we can attack that, and kind of give a timeline for what it's going to look like, saying, hey, if we do these things, this is what we've seen in the history at Repair Your Credit. Maybe do this and this to really work on that so we can get it to a spot where in the next 3, 4, 6 months or whatever, we can look at buying a house. So,
last one. I have a 480 credit score and no job. Can I buy a house?
If you got the cash, you can buy a house for sure.
Yeah.
So
Okay, there you go.
that's one of those things that I would sit down and we might work on a plan, but that's going to be a no up front.
Yeah, talk to Aaron Owens. He's your agent. Okay. Anything I'm missing or forgetting to ask as far as that a new agent talking to a new client should know?
Commerce specific, there's a couple things that we're really working on right now that I think is going to be benefit to you guys. One is we're doing our best right now to keep up with a lot of those online suppliers of loans that you have. So Commerce has just really funneled a lot of funds towards our online platform to make it basically a 5-minute pre-approval application process that we can get done pretty quick. So we're trying to keep up with the Quickens or the Rocket Mortgages. There's people that are just being able to pop out pre-approvals really fast, except the difference is there that you're still working with a human, that you're going to be working with the entire process of the loan. So that's one big benefit, is we can do mobile applications now from people's phones and take that. So and then the other benefit that I'd say Commerce is working on right now, I'll say 2 things real quick. One is we are coming out with new loan programs constantly. We have an amazing support staff based out of Kansas City and St. Louis that is constantly working on updated loan programs. And so we have really, when we get down to it, probably about 40 or so different loans that we can do, from adjustable rate mortgages and all those things, like I said, we hold on to. So we're going to be really competitive in the products that, our specialty that we do. And then finally, we're coming out with a new program. Literally, it's starting in January of 2020, and we will be doing what's called It's Total Expert, and it allows us to partner with you as a realtor, free for you guys. We're handling all that stuff, but it's a really awesome CRM, customer management. But on top of that, it allows both of us to stay in front of customers from whether it's an open house all the way through the process of doing the loan, and then after the loan as well, because we all know that the best type of customer is usually the best customers we have usually come from our best customers because of the referral basis. So we're really dumping a lot of money in there to co-brand and work together with you guys to be the best possible source for a loan realtor combos that we can do, to where whether we're doing open house flyers, open houses in general, or any other type of networking, that we can co-brand material so that we can partner together to be the best possible asset to your customers. So
cool. So obviously, guys, having a go-to lender is probably one of the most important relationships you can have in building your real estate business. Mitchell's a great option for that. We can put his contact information somewhere so you have it, or put it on the Facebook page or something, but if you need it, we can text it to you as well. One of the most important things I can tell you here is use a local lender.
yeah.
I mean, we say that all the time. There's a lot of good lenders out there, but use a local lender. Mitchell talked about that several times, just about having the opportunity to be able to go in and talk to him directly. They have access to everything else that all these big companies have access to, sometimes better.
Yeah.
They have the exact same loan programs. You can talk to him after the deal's closed. So using the local lender is the biggest thing I can tell you as far as whenever you're helping clients purchase. And not just new homes. I mean, they can do refinances and all that stuff.
Yeah, absolutely.
Obviously, Mitchell knows what he's talking about. Been doing this for several years now. So hope that helps. Anything else you want to add in or say?
No, if you have any questions or your buyers have questions or anything like that, feel free to reach out. Like I said, my contact information is there and it's available to you guys. And I put my cell phone on that card for a reason. I like to joke that, a lot of banks are, people joke about banker's hours all the time, but I like to bring up that I work realtor hours. I have my cell phone and my laptop on me basically at all times. So if you have a buyer at 8 o'clock on Saturday night that says, hey, we need pre-approval for this, I can get something kicked out to you. So I like to bring that up just so you guys know that I work with you and for you guys as well. I'm working with your buyers and for your buyers as well. I'm not, that I like to team up. We're teaming up and working with specific realtors each time. And so I'm there for you guys. So if something comes up, that's why my cell's on there. I want you guys to be able to reach out to me at any time. So
there you go, guys. If you have any questions, get with Mitchell, get with Aaron or myself. We'll help however we can. But you don't have to be an expert in everything, but you have to know how to connect people with the experts. Okay? So,
absolutely.
have a good day.
See ya.